Education with the 4 major analysis update for the 28th of November 2012. Hi guys, hope you had a great day yesterday. Let's have a look at the 4 majors this morning, starting with the euro against US dollar. So what did we get? Indecisive candle, a pullback from the indecision candle before that, and price failing to actually maintain above the 61.8 fib retracement. I took the high to the current low and drew these fib extensions here. You can see the 23.6, the 38, the 50, which was at 12.90, and you can see that the 61.8 here was above where price was trading the day before, but you can see quite clearly the price actually was moving between these 2 points. But the most important thing is it did not stay above that all-important 61.8 in order to see price moving higher towards the 78.6 and then towards these highs that we've seen recently at the 13,1500. It fell lower, closed lower, and doing so formed a high or swing, and sure enough this morning the Asian session price has moved back down towards that 12,900 mark on the daily, which is our 50-period moving average and a major support and resistance level. And at the same time now in the European Open, you can see prices now moving to the upside of that candle. So intraday, we want to see that price is moving hugging the upside of that candle width, and sure enough you can see very much so that we've had a lot of indecisiveness at the underside. So the price support here is likely to become a new resistance as long as price can't break above that 12.96. So as it stands at the moment now, you can see the pullback happening the last 4 hours, a lot more price action at the top end of the wick. The current 4-hour play candle is, we saw more further setting to the downside. It's still hugging the top end of that. If it fails to actually break above this area here, or the price support area through here at 12.95, and as we get a nice bearish engulfing candle, this could tell us that we're seeing a high. And if we do see that, then definitely seeing price rolling over, and if that's the case, price is going to head back towards that 12,900 mark. And if it can't stay above 12,900, then head towards the 50-period and the 200-period moving average, and then break towards that all-important areas down the bottom here. You can quite clearly see these lines all plotted on the chart. Most importantly, our fib retracements. You can quite clearly see if I make them nice and strong so they stick out. There we go. These are intraday ones. You can quite clearly see that these areas over here on the chart. So 61.8 failed to get above. Okay, now it's going to head back down towards the 50-period 50% line. Failed at 50% in the institution. It's going to fall towards the 38. Will take us back towards this price major support and resistance level, because you can see I've got the daily fib line over here plus our intraday fib line quite close together, which tells me that there's a lot of support through this area over here between the 1283 and the 128500 mark. We know that 1283 is a major support and resistance level on our daily. So if it fails at 1290, it's going to head towards this 1285 mark near term. So it's imperative this is to remain positive. It needs to get back up above 1295. Failed to do so, get a bearish engulfing candle here, then we should be looking for the downside to remain in play. On to sterling. Let's have a look and see what's happening on this particular pair. Very indecisive the past couple of days after this bullish engulfing candle we saw recently, and this one over here is coming after the Friday close. Monday, very indecisive, but all this, guys, taking place above the 1600, which is a psychological round number. A lot of bullishness on Friday, which took us above this resistance level here near term, and now we've seen 3 days of indecision, going higher, going lower, but all taking place above the 1600. And as long as it can stay above the 1600, then it's more likely for the price of sterling to remain positive against the US dollar and then head up. What we want to see now in our daily candles, a nice bullish engulfing candle or a support candle above the 1600. Price has got to remain above 1600 to look long-term positive. Our histogram, our templates on the daily is looking positive. Our moving average of the institution is below price. We've got a buy signal, the arrow candle, and the histogram on our side is positive. The only thing we have in the way is the 50-period moving average. That's above prices. You can quite clearly see here. It's stopping price from moving any higher. So we do need to see a nice bullish engulfing candle to break above all that. A nice positive bullish engulfing candle here above this area here to see price kicking on towards that 1500, that price support and resistance level high, before we see that all-important 300 mark at the upside being our long-term target. So intraday, we want to see 1600 below price. 4 hour, you can see I've got my fib projections from the all-time higher back in September to the current low that we saw in November, and these red lines over here are those extensions. 23.6, you can see where the 38.2 now, it's pretty much working with the 1600, which happens to be that major support and resistance level. So we've got two forms here, very strong support. As long as it stays above 1600, we are supported by a very strong consolidation area here. You can see prior when we had that breakout, bearish engulfing here through November, a lot of resistance above price, and you can see price maintained or consolidated at the underside of that before we saw the selling. And same over here, we have the breakup. Now it needs to consolidate, but we need to see that all-important bullish engulfing candle. Here we have the bearish engulfing candle to confirm negativity at the underside. We want to see a positive candle, bullish engulfing candle here to confirm the positiveness in this breakout to the upside, and then we head higher. Institution below price also, so a lot of factors below price helping us. Swing highs depicting upside movement here. You can quite clearly see the intraday trend. Apologies. Looking really good at the moment. And if I just draw that nice and thick so you can see it, there we go. Swing high, swing high, swing high, and we're getting into this area now where this possible trend could push price higher. We want to see a nice bullish engulfing candle here to confirm that. If, however, we see a bearish engulfing candle and it breaks below the 1600 and the institution moving average, then we should be looking for intraday negativity, and then we would target the downside or the prior swings or the prior fib lines. Quite clearly see here, if I move out, you can see that if we break one here at 38.2, it'll take us below the 1600, and doing so we should be then targeting the 23.6 to the downside, which happens to be our previous support and resistance level swing here at 1595 before we see the all-important zero being tackling again back down here at around about the 158500 mark. So as it stands now, guys, we should be looking for positive momentum. You can see the 4-hour candle at the moment on sterling pretty much hugging the top end of that, so that's positiveness coming through, but we want to see that in a nice bullish engulfing candle. We want to see price happy above 1600 on the hourly. We want to see price spending more time above 1600. You can see these candles, not a lot of decision in them, very small. We want to see a nice bullish candle. Okay, we don't mind giving back 50 pips to the market if that's the case. We want to see that sentiment driving price to the upside, and doing so, then we can start to look at potentially making a better reward for a longer term gain, because of the fact that the momentum generally will be behind price moving higher towards that all important 1500 and the 16300 long term. On to the US dollar Swiss franc. Let's have a look at this. Daily, we're back into this 940 mark, or the consolidation here that we've seen over the past couple of months. Price made an attempt to break higher and to break free of that consolidation, and we wanted to see, well, price actually stalled at the first part, which was 950. A lot of indecision. Then we had this bearishness, and the price reverted back towards the support area, which was prior resistance. We wanted to see price actually now finding support on there. It did not do so, and failed. And you can see the negativity in these candle wicks as we were punched through the institution moving average, and then we saw selling down towards the first part here, the swing at the 930 mark, which it reached quite well. Then obviously we saw the pullback, profit taking, and then yesterday's candle closing at the lower than the swing here at 930. The candle that's in play now, over the Asian session, you can see was trading higher, and as it stands at the moment now, still trading above the open. If that happens, then it's going to pull back a lot further than what we wanted was the consolidation over here. We'd like to see in price breaking lower, then to consolidate the failure at under price support, and then we look to price to move to the downside. So in this candle over here, we want to see one or two things. We either want to see an exhaustion candle, something similar to that, so failing here, so we have a long wick, and price is now trading at the lower end of that, so it's telling you that, yeah, we're now finding resistance here at 930, and then price will drop towards that 920 mark. Or we get a nice little bullish engulfing candle here, and it'll tell us that this is a near-term fall, and then we should be seeing price heading back up towards 936, and then back up towards those highs at the underside of 940. So as it stands now, if you wanted to, you could take the daily high here we saw in mid-November to the current low. So this candle over here that formed yesterday, it's formed a nice little support. Okay, you can see quite clearly support through here, and you can see the 23.6 is in play now. So price would have to close above 23.6. If that was to occur with a nice little bullish engulfing candle here, target the 50 pair moving average, which would be our 38.2 mark. Get above that towards 50, which is a major support and resistance level. That all coincides with the top end of this consolidation box. So you can see quite clearly how I get all my targets. Now we want to look at that on the underside, or the intraday targets. You can see here 930, price is spending more time above it. Look at the candles here on the 4 hour, guys. Spending more time above 930, using the 930 mark as a nice support. Very indecisive, but nonetheless still using it as support, not closing lower. Trading lower, but not closing lower. Very indecisive. We want to see a decisive candle. So if it means a nice bullish engulfing 4-hour candle, and then it tells us we should be targeting the upside, happy days, then that's what we do. Otherwise, we see a bearish engulfing candle here at 9:30. It'll tell us now that there's clearly this pullback was just a consolidation pullback or profit-taking pullback after this move to the downside, and then we should be looking for back towards that 9:20 mark to the downside as a possible target. So either way over here, we want to see either a bullish engulfing candle, top side favorite, or bearish engulfing candle, bottom side favorite. At the moment now on our 4-hour, the histogram is telling us we should be looking for negative sentiment. So look for that to be the major emphasis we're looking for. However, if we see a bullish engulfing candle here, then you should be seeing buying coming through on the sentiment side from your smaller time frames, and you can profit from that. And then if that's the case, then what we should be doing is targeting the upside on that. So we take the all-time high on the 4-hour candle at 950 to these lows at 925, and you can quite clearly see that price is now being consolidating between 2 points, the 930 and the 9 and this 920 or 930. What's that? 3250 mark. Got to get above that, and then we target the price swing low 38.2, which is a good 30 pips away, back to the 50-period moving average and back towards that institution moving average here at 50%. On to the last pair of the day, the US dollar, Japanese yen. Let's have a look and see what's been happening here. A lot of momentum to the upside recently. Past couple of weeks moving higher, and in doing so trading above the all-important 80 here, which happened to be a major support and resistance level. Positiveness moving, but coming unstuck just recently. This is our 5th consecutive day of negativity after price actually broke higher, and now you can see quite clearly the 820 here. We have some consolidation, and what it's doing now is pulling back to this prior consolidation area here that we saw through February and April. As long as it can stay above that area, ideally stay above the 22.6. If it fails to get above 22.6, then price is going to revert towards that 38.2. But you can quite clearly see there is a consolidative range where price is trading right now, just above the 81.50. If it can stay above the 81.50, then let's hope it can actually find or build on support here, because it is quite a strong move to the upside. In doing so, we could look to profit some more. However, if it fails below here, guys, then you should see price falling lower, and if that's the case, head towards 38, the 50, the 61, which happen to be prior resistance here, and then back towards the 80 mark, which happens to be below us. So positiveness, histogram still looking positive, but we are seeing consolidation now. We had indecision, and the decision was lower. Wait for a break of the 23.6. Very indecisive yesterday, not breaking lower than 23.6. Today we're seeing price trading below the 23.6. If it closes below the 23.6, then we should be looking for price to head towards that 38.2, the 50, the 61 to the downside. So as it stands now, we want to see price closing below that 81.70 mark. So on our 4-hour chart, we want to see that happening. You can quite clearly see the 23.6 on this time frame. Support, breakout, bearish engulfing candle. The last 4 hours taking us below. It now needs to, you can see price is pulling back to the underside of that. If it fails here, resistance, and we get a bearish engulfing candle at the underside of 22.6, then price will move towards that 81.40, which happens to be the price support and resistance consolidation line here at the 38.2 Fib retracement area. So take that in consideration, okay? Then get below that will be the bottom end of this consolidation range here. You can quite clearly see price actually went into this little consolidative range. Yeah, top side, there we go, and that'll be the bottom of it here at 50% line. Get below that, then we're heading towards the 61.8, which is 80.50 here, and then which is moving into the institution moving average. If the institution moving doesn't hold this momentum, then it'll target the 80 again, which happens to be our daily major support and resistance level. So you can see we have 2 parts now on our 4-part strategy template, red. And if it stays and we get a bearish engulfing candle here at the underside of what was price support and resistance, then we start seeing the histogram starting to go red, on especially in our hourly time frame, to confirm that we should be looking for negativity intraday. There we go. Let's go to the 4-hour. There we go. So institution below price on our hourly, but for the first time we're seeing price trading below the institution and below that support at 23.6. If that continues to be the case, then we should start looking for a bearish engulfing candle here intraday. If we do get a bearish engulfing candle, then target to the downside. Price support and resistance level here at this 38.2 mark here at 81.40 would be our target to the downside for this pair. First target, second target down here at 8100, and then the targets to the downside towards that 80 mark. That's it for today, guys. I hope you have a fantastic trading day today. Please make sure you look at the news to see if anything out there that's really going to move the market today. And if you are using this particular template, please back it up with the sound management that you require. Any trading strategy that you put into place must back it up with some really good money management. If you don't do that, then you're likely to fail. It's that simple. So very important. Follow the rules of your template or this template, and just make it as simple as possible, guys. Okay, major support and resistance levels are key. Trend lines, see where price is trading. In conjunction with that, look at candlestick patterns at these major support and resistance levels. They will give you the indication that you require. They will tell you where the sentiment lies in those moves, so you can actually get a better understanding of where price is likely to move to, and then you just trade in that direction. Okay. Other than that, have a fantastic trading day, and I'll see you tomorrow, which is our last day before Nikki and I head back to South Africa. And then next week we will do video analysis every second or third day, depending on how the broadband's doing. Other than that, hope you have a fantastic trading day, and I will see you first thing tomorrow morning. Until then, you guys trade serenely.